Hey everyone, today we will talk about cryptocurrency during the pandemic and what you can expect after COVID-19.
Our guest today is OJ Jordan. He is crypto trend expert. Welcome, OJ. And our first question is, how did the cryptocurrency perform during the pandemic? And what you can expect?
Well, it actually performed spectacularly well during the pandemic. We had, in the first days when the pandemic started, when governments started announcing that this is now considered a global pandemic, we saw a big drop in everything, including oil prices, stock market collapsed, everything dropped, and the crypto market dropped with it, because there was this initial panic of, oh, what are we going to do? We've never had this kind of a situation, global pandemic, not just locally, not just one country or two or five countries. We're talking, pretty much everywhere. And many people decided to cash out some of their investments and things so that they can actually have liquidity, they can have money, cash in hand, in case we go through something really scary and in case you actually need to have money in your pocket. So this is why the markets first dropped. But crypto was the first market that recovered, and it recovered spectacularly well within just a few weeks. And the drop was actually, in a matter of 2 days, we crashed by more than 50%, if not even 60%, something like that. Bitcoin went from $8,000 or $9,000. It went again to below 4, very briefly. And in the next few weeks, it recovered pretty much to the same level, not immediately, but it went first to 6,000, then it went to 7,000. And then from that, it stayed around 7,000 for a little bit. And from that point on, it started growing. That coincided with the halving of Bitcoin. And this is a very important event that only happens once every 4 years, which is the production of Bitcoin is, I don't know if the viewers know about this, so I'm going to try and explain it very briefly and simplify it. So Bitcoin is being produced with the mining of each block. A block is basically a file that contains all of the latest transactions. So every 10 minutes, we actually produce one of these files with all of this data recorded on them. And whoever is, the lucky person to mine that block, because it happens by random, they receive a reward in Bitcoin. And currently that is 6.75 or 6.25, what is it? 6.25 Bitcoin. So before last March, last May, which is when this halving happened, we were mining 12.5 Bitcoin. So every block was coming with that reward. So this is basically every 4 years, you have the production of Bitcoin being reduced by half. And it's very significant because it means that now the supply on the market is half as much as what it was prior to that. And when you have less supply of anything, then of course the value goes up. That is provided that the demand is at least staying the same. And then if the demand increases and the supply is reduced, then you're getting even bigger explosion in the price. And that's what happened with crypto. So first of all, we had the halving. So the supply was decreased. And then the demand slowly started growing because many investors, including institutional investors, which we didn't have before that, they saw how quickly Bitcoin recovered from this crash at the start of the pandemic. And they realized that their money is better invested in crypto, and specifically Bitcoin, than gold or silver or any of the others kind of more trusted, let's say, investment tools, because gold for the longest time has been the biggest store of value and the safest store of value. But if you actually look at the charts, gold hasn't really moved that much in the last 10 years. Yes, last year it had a bit of a pump, it went even to a new all-time high, I believe, but the growth of gold was a few percentage points. The growth of Bitcoin at the same time was a few hundred percentage points. 300%, no, more than 300% over the course of last year. So definitely many investors, as they started learning more about it, they realized my money is better invested in Bitcoin than in many other things. Of course, they keep a lot of the other investments. I'm not saying they all moved completely into Bitcoin, but that really helped for the price to start going higher very quickly, because now we started having institutional investors, people with huge amounts of money. We're talking billions of dollars investing in Bitcoin. And prior to last year, it was mainly retail investors. And the retail investor is someone like me and you, just regular people. And typically they work, first of all, with smaller amounts. And second, retail investors are very easily scared. So the moment something happens, there is bad news, you see them start selling, and then Bitcoin starts going down very quickly. Now that we have institutional investors, these are typically people who are holding long-term. They don't care about the short-term price swings. They don't care that back in May, just a few months ago, Bitcoin dropped by 50%. And throughout June and July, it was down 40% from its all-time high. They don't care about that. None of them was selling. If anything, they were accumulating more during that dip. The people who were selling were the retail investors. So that's a huge difference in the market today from what it was a few years ago. And in that respect, I also consider Bitcoin right now to be still a much safer investment, not safe, but safer investment than many other of the conventional investment tools that we know more about.
Do you believe in the future people will use more crypto coins to pay the bills than to purchase?
Yeah. That is coming. I mean, that's actually the end goal. This is when we really talk about mainstream adoption, is when you see people starting to use Bitcoin and cryptocurrencies as a payment tool rather than just, I mean, right now, Bitcoin in particular is more of a store of value and not so much a payment tool. And that's also why people who criticize it, usually this is one of the arguments against it, is that it was created as digital cash, but in fact, nobody is using it as digital cash because people don't like to spend it. I'm using it though, because for a few years now, I'm mainly earning in crypto, not only Bitcoin. A lot of my clients pay me in Ethereum or Litecoin, because Litecoin is cheaper for transactions and stuff like that. So I am using my crypto to pay for things, even though not necessarily directly. I use debit cards. You probably know there's quite a few of them already. And debit cards, basically crypto debit cards, not just any crypto debit cards, where I hold different cryptocurrencies in them. And at some point, when I go to pay for something, that cryptocurrency gets, transferred into whatever currency I'm using, if it's a euro or dollar or whatever it is. So that's currently my way to actually use crypto to pay. But at some point, we should be seeing more and more companies starting to accept cryptocurrencies directly, so that we don't even have to go through fiat anymore. This is the end goal. I still feel that we are far from this, and we still have a few more years to go before something like that happens. But we see already the first signs. El Salvador is the first country that is now accepting Bitcoin as a legal tender. Before that, Japan did something similar. In 2017, Japan announced it. I mean, it was in the news that they make it a legal tender, but apparently it was misrepresented. They basically started accepting Bitcoin in many retail stores, and they kind of said to everyone, if you want to accept Bitcoin, you can do it, but they didn't force people to do it. So it wasn't really enforced legal tender. With El Salvador, they're now accepting it. I think from this month, they're going to accept it as a legal tender alongside the US dollar, which I think is their official currency. So this is the first steps. We are going to see more and more of these coming. And now we also have what is called a layer 2 scaling solution, the Lightning Network. And the Lightning Network is basically enabling microtransactions with Bitcoin with really low fees. close to what originally Bitcoin was doing. When Bitcoin was first invented, there were no fees. Later on, the fees started, being a few cents of a dollar for a transaction. You could, and even to this day, you could actually send millions or at least hundreds of thousands of dollars worth in Bitcoin to someone else. And that transaction can cost you $1, $2, $3, sometimes even less. It really depends on how busy is the network. But because the Bitcoin network is quite busy most of the time, the fees are much higher. So a lot of the times you would have a fee of, $5, $7, $8. And for a small transaction, even though for a small transaction, the fee might be $3, but if your transaction is $10 and the fee is $3, this is not good. So this is why we look now into scaling solutions such as Lightning Network that actually allow you to still transact and have these low fees. And they do it by basically opening a side channel, which is a private channel. And you have a lot of transactions that are happening during a day, let's say, specific time that you determine, many transactions, and you're not broadcasting these transactions to the official blockchain, to the main network. At the end of the day, when you close that channel, you are going to broadcast only one transaction, which is the result of all of these transactions that happened during the day. So you're going to pay a fee for only one transaction. And this is how you can actually spread that fee between all of these many transactions that you already had during the day. And you can charge people 1 or 2 cents per transaction rather than $1 or $2 or $5 or more. I mean, I kind of simplified it, so it's there's much more to it and it's more complicated, but more or less that's how it works.
Perfect. OJ, thank you so much for your time. Thank you so much for this
My
interview.
pleasure. Well, it was my pleasure to be a guest, and all the best with you and your viewers as well. If they have any questions, just ask them to drop them in the comments.